5 steps to get Silicon Valley Bank shut down. Step 1. Print money. In the past 3 years, US government printed tons of dollars. Then the investors had more money, and many of them invested to the startups in Silicon Valley. Then the startups wanted to put their money in banks. Why is Silicon Valley Bank? Don't ask. The world is small. Just remember, SVB grew to number 16th in US banking industry, with its asset increasing from 27 billion to more than 200 billion US dollars in the past 3 years. Step 2. Put all your eggs into one basket. Most of the money was spent to buy government bond, the so-called safe haven in general. Step 3. Go through with rate hikes. The Fed raised rates 8 times in 2022 by 425 basis points, which means a higher cost for banks, also a higher interest for people to deposit. So no one wants bonds anymore. Then the bonds price fall. Remember that? Bonds, actually, if they don't sell, the loss will not be realized. Then step 4, withdraw money. Thanks to the rate hikes, the investors do not have that much money anymore simultaneously. But the startups had to feed their families, the operational cost. So they had to get their money back from SVB and back until the bank has no cash to pay anymore. It had to sell its asset at a lower price to make its loss come true. But it didn't want to lose that much. It conceived a plan. Finally, the last step, tell the world. SVB made an announcement to sell stocks, to raise money, to let all investors know about the fact that they need cash. As you know, the world is small. The real bank runs happened. Finally, Silicon Valley Bank had to sell more bonds to get giant losses. The failure of Silicon Valley Bank was directly caused by maturity mismatch. But the fundamental was that the incapability of the US government, overissuing dollars, and the failure of supervision.